Hey, this is Matt from InvestiQuant. Today is Thursday, April 29, 2021. This morning we saw the markets gap up to all-time highs, kind of breaking out of a consolidation pattern, but they were quickly met with selling pressure shortly after the open. So we opened up sizably and then sold off. And selling off, we took out the lows from yesterday. So currently we have a lower daily low than yesterday's low. And with the open way up where it was, we have a higher daily high than yesterday's high. So that's called an outside session. We're trading down below the open, so it's forming a red candlestick that is an outside candle. So we're going to take a look at what that has led to historically as we approach the close. I'm going to go ahead and hop into Discover, load up all four instruments, and use a time-based entry that's getting long at 3 p.m. Eastern Time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now to set up this pattern, we opened above yesterday's high. So I'm going to add that here from the opening area, open above prior day high, hit equals there. Next, I'm going to go into the post-open filters and add that our current daily low is less than the prior day low. So to do that, I'm going to go down to the bottom of the categories here, the intraday low versus daily low, and I'm going to hit equals next to less than prior low. So that means that the intraday low as of the time of entry, which I've got set to 3 p.m., is less than yesterday's daily low. And then I'm going to say that the price at 3 p.m. is below the open of the regular trading hours. So that's in this category here, intraday close versus intraday range. I'm going to hit equals next to close under open. That means the 3 p.m. price is less than the 9:30 a.m. price. Next, I'm going to go into the indicator section, say that we are in a bull market by putting us above a 10 and 200-day simple moving average, and now I can hit view results. And here we go. These are the results of going long at 3 p.m. Eastern Time when you have an outside day forming where you open above the prior high and you are trading below the open at 3 p.m. This is taking place in a bull market environment above a 10, above 200-day simple moving average. Historically, the S&P has 57 samples, the NASDAQ 59, the Dow 51, and the Russell 41. And the win rates on these are all very neutral. S&P coming in at 51%, the NASDAQ 53, the Dow's the strongest of the group at 57, and the Russell's the weakest of the group at 46. And average win, average loss here. The average loss is larger than the average win in the S&P. They're very similar in size for the NASDAQ, and then the average loss is larger in the Dow and the Russell. So 3 of the 4 have larger average losses compared to their average wins, but the win rates on all 4 of them are very neutral. And I'll tell you, I looked at many different things here this afternoon, looking at different patterns, seasonality type stuff. You know, tomorrow's the last day of the month, and I found a lot of studies that look like this heading into the afternoon, where it's just very neutral. There wasn't much that showed up with a strong bias in either direction. So I'm seeing very mixed results here, which has me thinking sitting on hands may be a worthwhile plan into the close. So hopefully you found this helpful. Good luck the rest of the day, and I will see you tomorrow.